Welcome to the introduction video on the components of the order book. In this video, we'll learn how to dissect the order book and understand each of its elements. We'll look at the information that every component gives us. Together, we'll learn how to properly read each of those elements in order to have a global reading of the market and understand what is happening at this instant. So what are the components of the order book? Firstly, we have the price column, which gives us the value of an instrument at this moment in time. Over here, this column shows you the volume profile. The volume profile is a tool that lets us see the history of all the transactions that were actually executed since the beginning of the session, and at what price the transactions were made. This allows us to develop trading strategies. Next, we have the bids column, also called the buyers. The bid represents the quantity of buying contracts required by traders at each price level. They want the market to go up. On the other side, we see the asks, or the sellers. That shows us the quantity of selling contracts required by traders. Inversely, the sellers want the market to go down. In the middle, we have the tape or inside print. This shows us the trades that have really been executed at this time. Every time there is a trade made in the inside print, it will have this information in the volume profile column. We also have a column that will help us to manage our positions. When we take a position in the market, it is with this column that we'll be able to move our stop or take profit. We also have a note column. This column will allow us to write any notes or information that you'll need to remember throughout your session. The first elements that we'll look at is the price column. The primary information that the price column will give us is the value of its instrument at this instant. If you have the same visual I have, and you're using the Jigsaw Dome, you'll see that the prices here with the gray background represent every level of price that have been traded since the beginning of the session. And the prices here with the black background are the prices that have not been traded since the beginning of the session. The use of two colors, gray and black, help us easily via the visual indicator to see if we're approaching the top or the bottom of the day's market range. Those important levels will influence our trading strategy. For example, most of the time the Treasury bonds will react in correlation. If a bond approaches its low, the general rule is the other bonds will also tend to be on their lows. So what usually happens is if the bond breaks its low, there's a good chance that the other bonds will follow. Therefore, we may use this as an indicator. On certain days in the market, we'll acknowledge that the ZB or the Ultra bond here will act as a leader. By a leader, I mean that if, for example, the UB breaks its low, the other bonds will shortly follow. That's one of the first indicators that we'll look at. Now I give you an example of the Ultra bond and the ZB, but there will be days when the leader might be the ZN or the ZF. If, for example, we're trading in the middle of the market range, we'll then be using the volume profile. Remember, the volume profile here in turquoise, it represents the total number of transactions that were really executed at a specific price. For example, we see here at 23,205, since the beginning of the session, there were 16,167 contracts exchanged. Thanks to the volume profile, we'll be able to develop strategies specifically for the volume profile breakout and the pressure point. The volume profile is a perfect tool in order to develop very simple and efficient strategies, and most importantly, it will help us to considerably limit our risks. The next elements will be the bid here and the ask. The bid is shown here with 10 different price levels, indicating the number of traders that have the intention of initiating a long position. They want to enter the market at a specific price, and the more the markets rise, the more profit they'll make. Inversely, the ask representing the sellers indicated here with 10 price levels as well are the number of traders who have the intention of taking possession of contracts in order to short sell them. In this case, the more the market goes down, the more profit they'll make. Note that these are uniquely intentions. So it is here with the bid and the ask that we'll be able to see the manipulation of the order book. When we look at the bid and ask level, we'll only focus on the 3-4 boxes. The first 3-4 level are where we'll find the most important information. The last few numbers indicated contain no important information and therefore not worth looking at. Now that we know that the bids and the asks are strictly intentions, how do we know then which are trades that were really executed? They're found here in the inside print. The inside print is also called the tape. Here in red, we see the number of contracts that were exchanged at the seller's price, and in blue, it represents the contracts that were exchanged at the buyer's price. Looking at all this, if we're on the bid side or buyers, What we'd like to see is those bid levels getting bigger and see more and more blue in the inside print. The more blue we have and the larger it gets at the bid level, it will indicate the growing power of the buyers. The sellers will then understand that the buyers are present and powerful. This will have the tendency to drive the market upwards. Inversely, when we're on the seller side, the more that there's red here in the inside print, and the larger the numbers get in the ask, the more we'll see a tendency for the market to drop, because it shows the buyers that the sellers are powerful. The column here allows us to manage our position. Here, for example, I'll initiate a short trade. In other words, I'm hoping that the market will go down. The column that you see here on the left, once my trade has been executed, will allow me to move my stop and take profit. I've now entered the market. You can notice that the price's background is now red. This tells us that at 23,185, I've entered with a short position, so I want the market to drop. Here, we have my stop order. We see 10 for 10 contracts, and the S that stands for stop loss. Here, we see my take profit order. If the market drops here to 23,135, I'll automatically exit this 10 contracts position. Inversely, if the market ends up rising to this level at 23,210, then reaching my stop order, I'll automatically exit my 10 contracts position with a loss. The last column allows us to include notes. We can use it to indicate the opening price of the market or other technical mentions. For example, at this price, we had an iceberg order. I'll have to be careful on this level. In the trades example videos, you'll learn how to assemble all of those elements information in order to properly read the market and make the best trading decisions.